The scanner in the CMLviz Trade Machine Pro is one of the most powerful features in the application and has also been recognized as one of the most powerful features in all of option trading. And here's how to use it. In Trade Machine, simply go to the Pro Scan tab. We will start by looking at scans by strategy. You can select any ticker group you like, so you can look at the Dow 30, the NASDAQ 100, the S&P 500, or all companies. We will continue to add subgroups to these as the application progresses. For purposes of this demonstration, we will use the S&P 500. Then you need to select a strategy. We have 4 categories for strategies. There are strategies which never trade earnings, things like covered calls, short put spreads, or long straddles. There are strategies that only trade earnings, like buying a strangle or a straddle on the day of earnings, looking for a large stock move. There are post-earnings strategies. These strategies come after the earnings event, and we look at things like a 1-week long straddle after earnings, a 1-month short put spread after earnings, and a 3-week short iron condor. So the first trade has no stock direction risk, the third trade has no stock direction risk, and the middle trade has a slight delta bet. That is, it is a bet that the stock won't go down very much. Finally, we have a pre-earnings scan. We have 3-day, 7-day, and 14-day pre-earnings call buying. These 3 scans look to benefit from the remarkable bullish momentum ahead of earnings, largely in megatech stocks. This bull market has a personality, and irrespective of whether tech companies are beating earnings or not, a huge amount of momentum builds into the earnings event, and these scans are designed to find the best stocks to follow that pattern. We also have a 6-day pre-earnings long straddle. This scan simply looks for companies where the stock moves a lot in either direction right before earnings. And we have a more sophisticated 6-day pre-earnings vol scalp. We would consider this strategy an advanced or even expert level option trade, which we discuss further in the CML Trade Machine manual. Let's go ahead and look at 7-day pre-earnings long calls. So we'll simply click on the button, and here are the results. When you do a scan, you can look at 1 and 2 and 3 years, or any subset of them. For purposes of this demonstration, let's just look at 2 and 3 year tests. So we will uncheck the 1-year button. The scanner, by default, sorts by the win rate. You can also sort it by the number of wins. Alternatively, you could do it by the average trade return, the total backtest return, the backtest length, or even the next earnings date. When we sort by the number of wins, we see the top 2 results. It turns out, over the last 3 years, for every single earnings session, that is for the 1 week before earnings in Microsoft, buying a call 7 days before and selling it the day before earnings, the trade has won all 12 times for an average trade return of 51.68%. That's 52% in 7 days, for a total backtest return of 850%. NVIDIA shows similar results. It has won 11 of the last 12 pre-earnings periods with an average trade return of 47%. Since we're looking at the S&P 500, we're looking at mostly liquid options. We can also switch over to the NASDAQ 100 if we're looking for the tech-heavy index. Let's go ahead and do that. And again, we will sort by the number of wins. Of course, Microsoft and NVIDIA are already in the NASDAQ 100. The next companies we see are EA and X-Ray. We can also see some other familiar names like Netflix and Baidu. While the scanner shows you the results, the real details come by simply clicking on a ticker. So we can click on Microsoft, and here is our backtest result. Again, 12 wins, no losses. But when you load the backtest, that is when you go from the scan tab to the backtest tab automatically by tapping on a ticker, you can see the details of the trade. So it is long a call. Custom earnings means custom dates, so we can click on that to see what's going on. As expected, this is a trade that opens 7 days before earnings and closes 1 day before earnings. This is not an earnings bet. This is a pre-earnings momentum trade. In this scan, we have also implemented stops and limits. In this case, if the trade goes up by 40% at any point in the week, the trade will be closed. Or if the trade goes down by 40% at any point within the week, the trade will be closed. Otherwise, the trade will be closed 1 day before earnings. As always, we can tap on a backtest tile to see the details, and here's where we see that 51.7% average return and all of the details surrounding it. We can also download all of the data into Excel or simply copy and paste it into Excel Excel so we can look at the trades in more detail. Now let's go back to the scanner. While we've looked at a pre-earnings momentum trade, we can look at another one as well, which is looking 3 days before earnings. This is a tight swing trade. So we'll click 3 days. We'll sort by the number of wins. We're still looking at the NASDAQ 100, and now we can see that Intuit has been the best 3-day pre-earnings trade. And you can see Netflix here and Broadcom and some other common names. We could do the same thing for 14 days before earnings. And you'll start to find the companies that follow this bullish momentum pattern, but you'll also be able to find the stock dynamics that match them best. We can also look at 6 days before earnings long straddles. While the other trades we looked at are direction specific, this has no stock direction risk whatsoever. We can sort by wins again. And here we see if we don't want to take a stock direction bet, that is, we don't want to just buy a call ahead of earnings and hope the stock goes up, this is a stock direction free bet. That is to say, it's a trade that benefits if the stock moves up or down. We can also expand our ticker set to the S&P 500, and we can see the results of the companies where we're trading before earnings but not taking a stock direction risk. And we can also look at only 3 years this time. In this case, we see Estee Lauder and Amazon, as well as TJX and the Chinese e-tailer JD. If we look at TJX, we can see over the last 3 years that the strategy has won 10 times and lost twice with a return of 138%. If we click on the tile, we can see that the average trade return is 10.2%. That includes the losses. The average win was 13.5% and the average loss was a 6% loss. So this is a much less risky trade than a straight down the middle bullish bet, but of course the returns are a bit lower. But keep in mind, this 10% average return has occurred over just 5 days. And how do we know that? We come down to custom earnings, so we can see what the scan is doing and open it up, and we see this trade opens 6 days before earnings and closes 1 day before earnings. So this is a 5 calendar day trade, which takes no stock direction risk. We can look at post-earnings trades as well, and for this example, we will simply look at a 21-day after earnings short iron condor. This trade also takes no stock direction risk, but it's a bet on the stock not moving a lot as opposed to the prior trade, which was a bet that the stock will move a lot. We can focus in on the NASDAQ 100, and we can see some familiar names again. Here's Facebook. Here's Illumina. If we look at Facebook, what we're finding is that the trade has won 11 of the last 12 post-earnings sessions. So for the 3 weeks after earnings, this has won 11 of the last 12 times. A 92% win rate, 25% average return in just 3 weeks, for a total backtest return of 352%. This is a nice trade to have combined with another trade that's long volatility. This trade is the opposite. It bets the stock won't move after earnings. If we tap on the ticker, we can now see the trade that the scanner was looking at. It's short an iron condor. We'll click on the dates. It starts 2 days after earnings and closes 21 days after earnings. So this is essentially a 3-week trade. We can see that stops and limits have been implemented. Of course, you can take them out if you want to or change them. And the results at this point are 11 wins and 1 loss for a 348% return. We can go back to the scanner. We can go through this exercise for every strategy, but there's even more power to the scanner. Let's step away from the strategy tab and look at the buy ticker functionality. So we'll click on buy ticker. You can enter up to 100 tickers in this box, separated by a comma, to create your own custom portfolio of stocks you like to scan. If you're using Google Chrome, you can actually reshape this text box, but if not, it doesn't really matter. Just enter a comma delimited list and you'll get your results. And if you're wondering how I find all of these great trades for our members that have worked out so well, this is the magic I was using, and now we're making it available to everyone else. I like to start looking at 3-year backtests, but you can feel free to look at any and all backtest lengths. Then I like to sort by win rate, which is the default functionality of the scanner. And what I'm really looking for is a portfolio of trades. So I'm okay with trades that take a stock directional bias, like the pre-earnings momentum trades, as long as I have other trades which don't take a stock direction bias. And I'm also okay with owning volatility in some trades, like the pre-earnings Apple straddle, as long as I'm also taking strategies which sell volatility. Let's look at how the trades with win rates over 80% already have created a diversified portfolio of trades. The first trade is the Facebook pre-earnings volatility scalp that we looked at. This is a trade that takes no stock direction risk. The second trade is the pre-earnings call in Nvidia. This takes stock direction risk. And then we look at Apple, 1 month after earnings, selling a put spread. This is a short volatility trade and a slightly bullish trade. Then we have Facebook. This is the 21 days after earnings, selling the short iron condor. This trade takes no stock direction risk. Then we have a pre-earnings trade in Amazon, which is long volatility. And then we have the after earnings straddle in Google, which takes no stock direction risk. Then we go back to Amazon for the pre-earnings volatility scalp, which takes no stock direction risk. And the last trade is another bullish bet to pair with the Nvidia trade. It's a straight down the middle 3-day trade which buys the call before Netflix earnings. So just using our group of 6 common tickers and sorting them by the win rate, we've actually found a portfolio of trades which take on almost every position. And of course, if you ever want to see any of these trades live, all you have to do is tap on the strategy and you can see the trade. And now for the final data point, Trade Machine now has earnings estimates. So while you're doing your scans for pre or post earnings trading, or simply for normal trades like a covered call trying to avoid earnings, you can scan for the earnings dates. Our earnings provider is called Wall Street Horizon, and they are the definitive source for institutional earnings dates. The scanner is only available to Trade Machine Pro members and is not available in Trade Machine Standard. Thanks for watching.